It's true. Across the globe, women aren't as prosperous as men. Gender inequality is a pressing moral issue, but we forget it has massive economic implications. If you were to put all of the women who don't have access to formal financial services in one place, they would make up the third largest country in the world. That means an entire population without bank accounts, credit cards, or other tools you and I likely benefit from daily. Prosperity for women starts with inclusive policies, products, and people around the globe, and the investment to make it happen. Welcome to the Making Finance Work for Women podcast. My name is Sonja Kelly, and I lead Women's World Banking's proprietary research division. Join me as I speak with changemakers around the globe to deconstruct the social and economic exclusion women face. We'll discover new evidence together and drive action to accelerate women's economic empowerment. Because a leg up isn't a handout, it's a global game changer. Hi, and thank you for joining us for the Making Finance Work for Women podcast. Today, we're going to be talking about blockchain and crypto. Is it a dynamic duo for faster financial inclusion? I'm your host, Sonja Kelly. If you're listening on LinkedIn, you'll also be seeing me show up in the chat, and I'm hoping that over there we can have a parallel conversation. So please feel free right now to say hello, let us know where you're listening from, and I'd love to chat with you while we talk with our guest. Today, as I mentioned, we're discussing the potential of blockchain and cryptocurrency for women's financial inclusion. For some context, blockchain and crypto have barely cemented themselves into the financial sector, but there are already hundreds of use cases testing it as a viable mechanism to lay a fast foundation for lower cost financial services. Today, women are often blocked from traditional financial services due to systemic issues like earning income in more informal sectors, lack of identification, insufficient collateral, mobility constraints, and limited financial literacy. So, how might this new technology contribute to women's financial inclusion and economic empowerment? Let's look for a second at an example of a low-income woman and consider how this technology might impact her. Let's say her name is Zawadi. She's a young adult in Kenya where 68% of the population is below 35. Many of them are left out of the formal economy. Zawadi does transient labor on a farm, and if severe weather events driven by climate change affect her livelihood, my question is what happens to her already thin connection to the economy? So there is an example that serves women like Zawadi of how blockchain-based systems could serve low-income women. We know that Mercy Corps joined with a blockchain consultancy called EtherRisk to get women like Zawadi registered on a blockchain. Then they used smart contracts to automatically trigger payments to them in cryptocurrency in a digital wallet associated with work that they did. So if climate impacts drive Zawadi from her work, given changing weather patterns, she has a digital wallet that works across borders and a recognized identity verification. Assumingly, Zawadi could take this digital wallet with her if she had to migrate long-term. Women's World Banking has been working in this space through partnerships such as the one we have with AidTech and Algorand Foundation, and through our position on the DM Association. And with that intro, I'd like to welcome our guest, Conor Svensson. Hi, Conor. Thanks for joining us.
Hi, Sonja. Great to be here.
Conor is the founder and CEO of Web3 Labs, which is a leading blockchain strategy and technology company specializing in solutions for enterprises. He's also the author of the best-selling book, The Blockchain Innovator's Handbook, and he's the host of the Web3 Innovators podcast. He also writes a weekly newsletter on Web3, and you can find him on Twitter and LinkedIn, where he regularly posts content. We'll put those links in the chat here. Conor, maybe I can just ask you to start out by introducing yourself. I'd love to know, one, what is Web3? And two, more importantly, how you got into this space.
Sure. So, yeah, really happy to be here on the podcast. And I think that with all of the noise that's been made about Web3 over the last few years, people can get caught up in overlooking what it is and why it is actually called that. And so, if we think about the internet, back in the early to mid 90s, really the first iteration of the web emerged, and that was really the domain of technologists, where you had web pages. The key innovation with this first iteration of the web was that access to information became democratized. All of a sudden, anyone could connect to this global network and they could create a website where they could share information about absolutely anything that they wanted to. However, it was kind of complex to do in that it was the domain of techies. It didn't really have a lot of mainstream traction at that point. The mainstream traction didn't really come until Web 2 emerged. And this was really in that period of really started sort of in the late 90s, but through to the early 2000s. And what we saw there with the emergence of social networks. Now, there were some that failed in the earlier days, such as MySpace, which I'm sure many people listening will at least know the name of it. But really one of the big ones to emerge out of that was Facebook, but then also LinkedIn and Twitter. So that was really an innovation that came along that really redefined what people could do online. All of a sudden, they could build actual connections with people anywhere in the world or anyone they'd ever known, as long as they were on these platforms. It wasn't just the social networks, though. We also saw other areas, such as the ability to publish content a lot more readily. With blogging, really came into its own back then as well. Insofar as, although it was possible to create blogs in the first generation of the web, you didn't really have the publishing tools to do it. But really what came with this was you had these interactive services, whether it's social networks, whether it was publishing tools where you could read and write content to the internet. Just casting back to the first iteration of the web, it was really just about consuming content. You could read stuff, but you couldn't write to it so easily. So Web 2 added this layer of interactivity, and that coupled along with cloud technology, which disrupted data centers, but also the iPhone and these smartphones gaining mass adoption. It was kind of this perfect storm where it really just exploded. And up until really the late 2000s, that was where the world was, and it continues to be throughout the 2010s as well. But in the late 2000s, something called Bitcoin was invented. And Bitcoin was really the genesis of Web3. Prior to the emergence of Bitcoin, there was a problem that had never been solved from a technical perspective. And this is, if I have a digital version of a currency and I want to transact with someone else, so say, Sonia, if I had uh, a currency and I wanted to send it to you online, we had to go through an intermediary. I mean, nowadays, many people use PayPal, but it would be or bank accounts and these sorts of payment providers. Whereas when Bitcoin emerged, you had this native digital currency that existed on the internet where you didn't have to use an intermediary to send it to someone else. And that was the key innovation behind Web3 and really the foundational technology of it. Underneath all of that, there's something called a blockchain, which is how the data was organized. I like to think of it as when you have an accounting ledger, you have all of these details of transactions in terms of where funds are going, what you're spending them on. You can kind of think of a blockchain as something like that, but it lives online on the internet. And then following on in the subsequent years, there was just a lot of innovation happened. Other than the Bitcoin network, the other notable one to draw people's attention to is Ethereum, because what that did was it didn't just provide a digital currency, it provided a global scale computer that anyone could access. And this programmability of it enabled people to create a new type of token-based asset, and that has, along with cryptocurrencies like Bitcoin, has just exploded and is kind of the new foundations. There's been lots of other innovations that we could talk about that have come out of Web3, but that's kind of it at its heart. Then moving just to your other question about how I got involved, my background was as a financial technologist. That's what I did for the first 10 or so years of my career, working at large banks, building trading, regulatory reporting, and then risk management platforms. And it was in 2016, I I decided to leave that world and focus on my first startup, which didn't work out, but it was in the mortgages space and trying to launch a new type of mortgage product in Australia. Unfortunately, it's quite hard to get access to a bank's balance sheet in order to do this. So my attention shifted focus onto blockchain, and really it was the Ethereum blockchain network. I just really geeked out on it and found it really interesting. Built one of these cryptocurrency miners, went to the hardware store to buy all the different pieces. And then as I kind of scratched beneath the surface, I found that there was a need for an open source library, which I wrote. And that was really my segue into it. And then I created Web3 Labs in 2017 to continue to explore the space and create a commercial entity that could bring more organizations into it, but also create technology for them as well.
That's fantastic. I feel like many of the best tech innovations start at the hardware store. I love I love picturing that journey from working in finance to this space. Yeah, that was great, and I also appreciated your explanation of what Web3 is. I thought it was a pretty simple explanation. I think our audience might see the word blockchain in this podcast and be a little intimidated. So I wonder if you can give one or two use cases for a financial services provider. Like how might they use blockchain in their day to day operations?
We're already seeing a lot of momentum in it, specifically in the whole, well, really in two places, I would say. One of them is within the very tightly regulated wholesale financial networks, where this is kind of the domain of commercial banks and central banks, where where the central banks really could control the issuance of a fiat currency, and the the commercial banks lend that. There's an awful lot of complexity in terms of data moving around there, where all of these different banks who are talking to the central bank, they kind of need to have similar views on how much of the currencies are circulating, and there's lots of data being exchanged, lots of reconciliations need to happen, and it's incredibly inefficient from the perspective of those banks. And so that's an area which there's been a lot of interest and growth in the form of central bank digital currencies during, well, so especially this last year or two as well. So this is an area that is very much a sweet spot for the technology within a more established commercial setting. However, the other area, specifically within finance, where it's having very significant impact, and this is actually where it's the developing world that is benefiting more from it than the developed. This is in the area of cryptocurrencies and these tokens as well. Now, cryptocurrencies, the best known are Bitcoin and Ether, and what they are is they're a digital currency that is tied to a blockchain network. The Bitcoin network is a blockchain network. The Ethereum network is a blockchain network, and the reason that those currencies are governed by those networks. I'm not going to get into lots of detail about how they work as such, because it's a bit of a rabbit hole, all of that. But by the same token, what you do have is you have the ability to create types of assets that exist on them. And within the Ethereum world, what has been incredibly successful is this idea of creating tokens. And these tokens can represent absolutely anything. It could be the deeds to a property. It could be one of these NFTs, which is like just a JPEG that's digital. It could be a token that tracks the value of the US dollar, which is more commonly known as a stable coin. It's endless. I mean, the best way I've heard it summed up is that as a primitive anyway, the token is to Web3 what the website was to Web1. So with the first iteration of the internet websites, that was the new thing. With Web3, the token is the new thing. And so we'd expect that there's going to be billions of different tokens over the coming years as the technology takes a stronger foothold. But one of the use cases that is very prominent is what are called these stable coins. And these stable coins exist as kind of native assets on these blockchains. A lot of them are on Ethereum, but there are versions of them on others. And what that enables you to do is, in effect, have an asset that's moves in lockstep with the US dollar, but the only limitations to accessing that are having actual access to the Ethereum network and a wallet to store the asset on. Uh, the barriers to entry for working with the Ethereum network are an internet connection. Barriers to entry to having a wallet, really, it's a hardware device, but more generally a smartphone. And this is absolutely huge for people who are in economies where they might have hyperinflation or just issues with their local currencies there, because all of a sudden they have a store of value, which is something that really exists on the internet, which they can be in that they are in full control of. It's kind of analogous to if you think about someone if they've got a stash of dollar bills, but the problem with the stash of dollar bills is it's a bit harder to carry around than having stuff on a smartphone. It's not to say that these stable coins are without risk. I mean, ultimately, you have an entity that is issuing them, and they are holding collateral that represents the value of those that are in circulation, and this is not guaranteed by a central bank like the Federal Reserve. So that's kind of a small detail to say there. But in terms of the application of the technology, it's huge, because if you're in a place where you have hyperinflation and you want to be able to hold dollars or get paid in dollars, you can do it using this technology.
Mm-hmm. Yeah, yeah, that makes sense. I'd love to ask you the answer to a question that I once heard Vitalik Buterin answer. I attended a talk at the World Bank that featured him, and the World Bank staff were just so excited about like, oh, your technology is. Oh, and just for context for our listeners, Vitalik Buterin was one of the inventors of Ethereum. I guess that's important context. And so the World Bank staff were so excited about this technology, and one person asked, "Should we be putting all of our contracts on smart contracts, and should we be paying out with stablecoin and Ether, and like should we be adopting this kind of wholesale?" And he said, "No, that would be stupid. Like, why would you? Like, you should definitely not do that." He said, "We're basically in 1990. In If you were to compare blockchain to the development of word processing systems, we're basically in 1990. And there are still so many different systems out there. And you, the World Bank, would be stupid to just choose one to put everything on." And so I wonder, where do you think now we are in the use and usefulness of this technology? Like, if you were to give me a date and compare it to the development of word processing systems, where are we in that trajectory?
So I'm certainly not going to disagree with Vitalik's views there, insofar as he's a very smart guy, and he's achieved a phenomenal amount with Ethereum. But also he's a pragmatist as well, which I think is very important too. Here, he's not someone who's got caught up in his own hype. He's definitely a good voice to listen to with respect to the industry more broadly. But in terms of tracking where we are in the overall evolution, I agree that there are a lot of parallels with the early internet in terms of where we are. Because if you think about who the majority of the users of Web3 technology are, and that really, when I say Web3 technology, I'm referring to cryptocurrencies, DeFi, which includes decentralized exchanges, decentralized lending, and stable coins, and then also NFTs and this other area, DAOs. Those are kind of the big areas. Um, it's challenging to work with these technologies still, and so therefore the people who are working with them right now, they're the early adopters. They're the people who are happy to put up with the clunkiness. Now, those early adopters, I see them as falling into three categories, broadly speaking. One of them is the technologists who they're in it for the tech, and they think it's world changing, and this is where the one area that is very exciting, because it's these technologists and believers that are what's making this landscape evolve so quickly, and makes it what it is there. The community is what makes these things great projects to be involved in and enable them to move. The other part is financial speculators, people who they don't mind learning this technology and how to work with it because they see an opportunity to make money. And Yeah, I think if you're honest about where mainstream crypto adoption has happened thus far, Web3, it's been within crypto and it's been the financial speculation aspect, just because people have made some astronomical returns there. Um, but then the other side too, and this is like a very important one. It's those people I mentioned earlier who might be in a place where they don't feel safe holding the local currencies there, or maybe they're unbanked, and this gives them a way of being banked, so to speak. I think it is very important when we talk about the unbanked to draw a distinction though as well, because it's not, blockchain isn't the solution for unbanked. There's still a lot of problems, as I'm sure you guys are very very aware of, and your listeners are, that the actual financial education is almost like the most fundamental barrier to a lot of things. And so once people need to have a certain level of I suppose, comfort, or just a level of income to be able to have things like a smartphone and internet connectivity and the education to actually work with these things as well. So it's, people have to be at that level, which there's still a whole load of people, on levels below. But those people there, they have a very real reason for working with this technology because of what it can give them. One area as well that's very much so aligned with this too is it's not just in environments where where you have maybe very volatile fiat currencies, but also in those people who are foreign workers living abroad, and remittance payments are something that they're making a lot of. Historically, you've got the remittance market is absolutely huge, and this is where you have maybe it's someone, say, in Mexico, working in the US, or maybe it's someone in one of the smaller Asian countries working, say, in somewhere like Hong Kong and Singapore, to for a family, and they're sending a lot of their wages back home. And uh, the way in which a lot of this was done historically was using the likes of Western Union, who charged like a whopping, I think it was like 4 or 5% on the actual payments there. They can use cryptocurrency for that now, using these US dollar stable coins. And so these are kind of the key, I guess, use cases that we're seeing now, but they're quite niche. They're, as I said, it's the people who are kind of forced into it. You've got the crypto speculators and the technologists. And so if we compare that with the first iteration of the web, it's kind of similar in that we had individuals who were kind of really into this idea of sharing information or love the tech. It wasn't like there was this big inflection point where everyone came online. The inflection point happened in Web 2, and that was because the barriers to entry or the convenience of using this technology just became so little. And that was this combination of the smartphone plus cloud plus the social media. But all of a sudden there was an incentive there for mass adoption, and that moment hasn't happened yet with Web3. It might be called Web4 by the time it does happen, in the same way that it was with Web2 that mass adoption of the internet happened. But we're still a few years off there. I don't think it will take quite as long as it did to go from kind of the first iteration of the web to the second, in terms of whether you're talking, say, a 10-15 year time horizon for it to really dig in. I think that we're probably working at at least double the rate that we are now, because there's a lot more. You have the internet connectivity and the communities and everything else working in a way that you just couldn't have people working at that rate. You didn't have the same funding options available and so on. So yes, we are still in the kind of Web 1 equivalent phase, but I think we'll get to the equivalent, Web 2 mass adoption phase for Web 3 probably within the next sort of 7 years or so. So, roughly half of what it took Web 1.
Mm-hmm. Yeah. Well, and you mentioned a couple of things I want to follow up on. I mean, you already mentioned the potential of cryptocurrency for financial inclusion, especially among the unbanked. And you mentioned as well the kind of barrier to entry of an internet connection and a smartphone. And I want to dig into that a little bit, because I'm a bit of a skeptic that cryptocurrency is a useful tool today for women's financial inclusion. Women are less likely than men to own a mobile phone in the first place, and much less likely than men to have a smartphone. And we know from the GSMA that even when people have smartphones, they don't necessarily use them for the internet, or at least very low income people. Additionally, there are places a lot of places still in the world where there's just not internet connectivity. But it sounds like you're an optimist, and I'd love to hear kind of the reasons that you keep in your mind for us to hope that cryptocurrency will be a tool for financial inclusion, especially for people who don't have a bank account.
I think it's important to draw the distinction between cryptocurrencies and digital cash, because I think a lot of the time people get kind of caught up in terms of them being one and the same when they are quite different. I certainly agree. Whilst I am very optimistic about Web3 technology, and I think that cryptocurrencies will have their place. I do agree that I don't think it's necessarily going to solve the financial inclusion problems. I think there's areas in which it certainly helps a lot, but at the same time, the challenges of financial inclusion can't just be solved by technology. I think a very good case study, and this is I had the fortune of learning about this from one of my staff. She's based in Kenya. And so she told me all about M-Pesa, which is their payment service that's provided by the largest telco in Kenya. And the, the barriers to entry for that are really low. You don't need a smartphone, you just need a phone, and you can put in like codes on your phone and you can make payments there. And it's massive, it's ballooned. And um, that is a form of digital currency. Yes, it's centralized and controlled by the largest telco, but at the same time, it's huge because to me it just shows that you don't need blockchain or you don't need smartphones in order to I suppose enable more people. Now there are definitely benefits to what the technology provides, as I mentioned, around say remittance payments, where you have very volatile local fiat currencies. It gives people optionality there, but I don't see it as a panacea for all of these problems. But just going back to what I was mentioning too about the fact that cryptocurrencies are not digital cash. Now, why that distinction is important. With a cryptocurrency, yes, it behaves in some respects a bit like cash in that you can send it to someone else, you can make payments to it, but at the same time, you have to go via the network in order to do it. You can't just hand it over to someone else without an internet connection. And for it to be digital cash, you need to have that ability there where you can go to someone in the middle of nowhere where there is no internet connectivity and say, "Here you go, have some digital cash there." And it is important that because even if say we do get whether it's a cryptocurrency or something that is able to fulfill those properties, that can certainly make a difference because then the internet connectivity is not a challenge. You still have the challenge around whatever device it is, but yeah, I think it's quite important just to call out the digital cash is kind of a different concept to what cryptocurrencies are.
Hmm. That's an important clarification that I hadn't made, and so that is really helpful. I'd love to kind of continue on those lines. You mentioned financial education, and that's something we often talk about here at Women's World Banking. We talk about um, moving people from access to services to use. And the key to moving people along in that journey is often financial education or financial capability building. For example, we worked with a digital wallet provider in Cambodia called Wing, which was seeing a full cash out of salaries on the wallet through which they paid people by default, with very little store of value on the digital wallet. And so I wonder about like if you were to sit with somebody who's accessing digital currency for the first time, whether Bitcoin or CBDC or just some other like app based digital wallet, what are the things that you would try to convey that would convince them that it's trustworthy, that they can use it, that there is sort of a use case for buying and selling and using it in their day to day and not just like accessing it. What are the kinds of things that you would convey in that situation?
I think the most fundamental one would be that you need to get the person understanding that something that's digital can have a store of value because that in itself, I'd imagine would be mind blowing. If you're used to having physical items as a store of value, and then all of a sudden someone's showing you a picture on a phone, and it's like, what is this? And that to me is like a going to be a key first step there. And then really it's got to be about demonstrating the utility with it. It's how something they do in their day-to-day life can be done using this app that makes it more convenient for them. Because if it's not more convenient for them than what they do currently, there's no incentive to use it. Maybe there can be a cost element as well there, but again, if you're if there's potentially quite a few, barriers anyway in terms of being able to, well, communication barriers of some not. I think it's going to be about the utility. It's you do this and then you can get this back, and that I think is the best way you could get that message across to someone.
Mm. Yeah, we did some research recently on Ukrainian women refugees, and we found that 76% of them withdrew as much cash as they possibly could before their journey because they just didn't trust that their financial services would be there for them in the receiving country where they were. And imagine if they had had that level of trust in their financial services and sense for the usefulness of digital money. They would have avoided a lot of heartbreak related to theft and personal insecurity along the way that we found. I like that vision that you just shared. So turning now to some questions on the future of finance, like if assuming this is the future of finance, and it sounds like with all of the inefficiencies and that it presents and lower cost, and it just seems to solve a lot of problems. And so I'm just assuming it's part of a big part of the future of finance. Um, what are some markets that you would look to say, oh, this country is going to be leading the charge, or conversely, this country is one that we really need to learn lessons from as they implement digital money, CBDCs, or cryptocurrency? What are the markets that you're kind of watching very closely?
So s- certainly, one of the countries that's very forward thinking in its outlook is Estonia. Now, I'm not across all of the different initiatives that they've been doing, but they were one of the pioneering countries with respect to having a true digital identity for their citizens. And so they just have this kind of mindset about really trying to embrace these technologies and I guess innovate with them. Now, I'm not an expert in terms of everything they've been up to, but I think that's it's quite important as a place to look to. More broadly, though, with respect to Web3 technology, we I don't think there's a lot of countries that are kind of great case studies yet. I think over time there will be. Now, El Salvador, they decided to make Bitcoin legal tender. I don't think that was the best idea personally, and I don't think I'm the only person who has this view. But I think that's an example of, it's probably the best example of a country really going all in there. I mean, just to touch, the reason why I don't think it's a good idea, it was a good idea, is just because of the volatility really of Bitcoin. I think maybe long term some of these cryptocurrencies will have better price stability, and then they will function better, so people can choose to use them as their primary, I guess, sovereign currencies. But I don't think we're there yet. Um, but certainly within the financial space in the developed world, where there's a lot of activity happening, is the well, I certainly look to the content produced by the Bank for International Settlements. Yes, it's very much so traditional banking and finance, but as an organization, they're doing a lot of research and publishing a lot of very good quality publications about how the technology can be used in those worlds, and they're coming at it from the perspective of really understanding how finance is now versus versus what can change with the new technology. That being said, though, there is the potential for the technology to be quite disruptive down the line. That sort of wider disruption hasn't happened yet, but I think that where the big things are happening, it's more about initiatives that companies are doing over initiatives that countries are doing at this point in time. And naturally, the private sector tends to be able to move faster than the state, which is understandable. But a great example from a couple of weeks ago was JP Morgan. They actually tokenized deposits and used those tokenized deposits to work with a version of the main lending protocol Aave on the public Ethereum network. And this was done in combination with, I think it was DBS Bank, but then also the Monetary Authority of Singapore as well were involved in that. So that to me was absolutely massive, because it's JP Morgan doing this with one of the big financial regulators too. So yeah, that's one of the ones that comes to mind. I mean, there's constantly things happening there, but yeah, I think that side of it's important. But then the other side is there are a number of different smaller countries that have embraced or rolled out their own central bank digital currencies. Certainly, whilst it's not so much from the inclusivity angle, I think that the work that China's doing is absolutely fascinating because they're much further along with their central bank digital currencies than any other major nation. And there is the potential with their Belt Road initiative, which which is really, I guess, a China-led sort of global organization where they've pulled in a lot of African countries as well and other countries in Asia to. And if they were to utilize that alongside CBDC, they could potentially create alternatives to global payment systems using renminbi rather than the US dollar. So there's some really big potential for disruption there. I know that certainly Western governments wouldn't like it, but it's very interesting to see. It certainly doesn't help, though, necessarily the unbanked angle or the people who are at the kind of the lower end of the spectrum. I think there, though, it's where it's less looking at the actual what the governments are doing. It's more looking to what the people are doing. Certainly in like some of the Southern American and Central American countries as well, because there's definitely people in those areas who are using this technology really because they're forced into it. But I think the Ukraine example though too, that's another very apt one. Certainly, we had a staff member who was in Ukraine when the war broke out. We were paying him in stable coins to his Binance account because it
Wow.
was safer than trying to send money to the Ukrainian banks because you just don't know what's going to be happening there.
Mm, yeah. Yeah. I think these are great thoughts and a couple of things I want to follow up on myself in later today. I wrote down something that you said earlier that I just want to bring back up again because I think it's a really nice summary comment, and then I'll turn to you and ask if you have
Yeah,
anything
sure.
else to share. But what I wrote down was you said the challenges of financial inclusion cannot just be solved by technology, but it sounds like there are a lot of reasons to hope that blockchain and crypto can enable inclusion given some foundational ingredients like technology access, connectivity, financial capability, those kinds of things. And so I think that's a really nice summary of kind of where we are in the space, but also the great potential. Anything else you want to add before we turn to kind of next steps on our end?
Um, I don't think there's anything else that comes to my mind, but it's a very broad space, and it's something that I can talk. Well, I guess I can talk about all day, but I also want people to really come away with be able to always look beyond the hype here because our hype is what's driving a lot of the noise about these, but underneath it all, there's something that's very sound. But at the same time, it's going to take time for it to really prove itself and become those new foundations that a lot of society runs upon.
Hmm. That's a great note to end on. Thank you so much, Connor, for sharing with us. And we like to turn to some kind of action steps for our audience. And the first one is everybody who's listening, I'd love for you to go out and read Connor's best-selling book, The Blockchain Innovator's Handbook, A Leader's Guide to Understanding, Adopting, and Succeeding with this Disruptive Technology. We're putting the link in the chat right now. So thank you so much, Connor. We really appreciate it. We'd love to have you back someday.
My pleasure. Be more than happy to.
Thanks. For those of us still with us, you can also read Women's World Banking's work on digital finance. We wrote a report on empowering women on a journey toward digital financial capability that has been tremendously popular, and we're linking that in the chat right now. You can also read about Women's World Banking's participation in DM and the DM Foundation. You can check that out in the chat. And then finally, the report I mentioned earlier, Beyond Wage Digitization, we'll put a link in the chat for that as well. That's the one I mentioned that's covering usage challenges faced by women Cambodian migrant workers with digital wallets. We also have opportunities to keep talking about this digital financial services and all of the new technology that's powering reach to women customers is one of the many topics for discussion at the Making Finance Work for Women Summit in 2023. Tickets are available now, and I'm also putting that link in the chat for all the details. I would love to see you there and have a conversation about this or other things related to women's financial inclusion. A big thanks to Dominic Maggi, our podcast audio engineer, our podcast program team at Women's World Banking, Ariane Wunder and Jackie Amaker, our guest, Conor Svensson. Again, check out his book. And finally, all of you, our listeners, we're so glad to have you, and we're so grateful to have been able to engage with you in the chat here. Please feel free to check us out, like this podcast, share it with somebody else. We look forward to next time with you. Thanks.